Eriksen Global. Welcome to staff and members of the committee and observers. We'll start with a karakia timatanga. Councillor Newman, please.
Mai te paimanga raro ki te tai, mai te awatonga raro ki te awaraki. Tēnei te hapori, awhai ai taratahi, whanau, hare mai te toki, homie huie tai.
Thank you. Are there any apologies? I haven't received any for the committee. Okay, we'll move to conflicts of interest declaration. Are there any conflicts of interest that the committee wishes to declare? If not, there is no public forum. We'll move straight to item 5.1, minutes of the previous meeting, 24th of May. I'm happy to move those. Do I have a seconder? Councillor Laurence, thank you.
Can I have that back at the end?
Any comments or questions or matters arising? If not, I will move the motion that we receive the minutes. All those in favour? Against? Carried. Okay, 6.1, investment update report. Kelly.
Thank you, Mr. Chair. So this report I've changed slightly based on feedback at the last committee meeting. You'll see section 4 includes a summary table, which we tried to make it really clear what the balance and movements of the investment are and their performance. So hopefully that's helpful, but also open to any further feedback if you'd like to see anything else. Yeah. So since the last committee meeting, we have invested, made all 3 investments that were recommended. This report is an update as at 30th of June, and you'll see that at that time we'd made 2 of those investments, with 1 made in July. At this time, we're not recommending any further investment at this point in time. I'm happy to take questions.
Peter, have you got any comments or anything you'd like to speak to?
I'll speak to the report that we've provided. I don't actually have access to any of the other papers, so yeah, happy to do that.
Okay, thank you. Members of the committee.
So, Kelly, the performance, that's over since inception. So
It is.
Yeah, okay.
That is, yes.
Well, thank you, Kelly. And yeah, the summary point 4, that's what we talked about last time. And I like that because it's really clear around where we're tracking. Kelly and I also had a conversation with Philip Jones, the chair of our Risk and Assurance Committee this morning, just around how we link in or loop in the investment committee's progress with risk and assurance, so that, I mean, when we look at our bottom line there, we've effectively lost 1% of our investment thus far. Now, while I accept the comments that it's really tell and things like that, I'd also like the oversight of risk and assurance just to help guide the investment committee at what point they might think that the slide is needs to be signalled that we need to make some other decisions or some other considerations. So Philip advised that Treasury report would come to the Risk and Assurance Committee that refers to our investment strategy and so forth, just so that we can have that extra layer of support for given that the investment committee is in its infancy. Are there any questions to Kelly on her report and Kyra? Somebody happy to move the report? That the report be received. Thank you, Councillor Newman, seconded by Councillor Laurence. All those in favour? Against? Carried. Peter, your report.
Thank you. So, yeah, as you've rightly pointed out, since inception, we are down. I mean, the market environment is such that inflation is proving to be exceptionally sticky. Almost everybody now is expecting rates to be higher for longer. We've got 1 or 2 of the bank economists now suggesting that another rate hike could be on the cards for later on this year. But generally around the globe, rate cuts are starting to come to a conclusion, and rates will be held for some time after that as inflation comes down. We are in the midst of a cost of living crisis. I'm sure everybody can feel that, and certainly around the community, some groups are feeling it at extreme levels. It is impacting on some of the investments that you're holding. For example, a couple of investments that are sitting in the Castle Rock portfolio, such as Vivo hair salons. Everybody's still getting, well, not everybody, but most people are still getting their haircuts, but they're not spending that discretionary dollar so much on extra products, which is where these sorts of places are making their margins. So we've seen a bit of a write down in the value of that. Saying which, though, I mean the company itself is still profitable, still producing cash going into this portfolio. I'll talk about that a little bit more soon. And the other thing, of course, is turning on the TV. Not only do we get a story on a climate event, but now we're getting several stories a day on climate events around the world, and they are impacting on portfolios to some extent as well. Over the June quarter, because that's the focus of the report, we saw essentially domestic equities going up a little. We saw global equities going up quite a bit. But to put that into context, a lot of that came from the United States, and most of it came from 7 companies, which is the big tech companies. Anything that looked or smelt like artificial intelligence, everybody wanted a piece of. If you go back to the start of the year, and if you look at the US market index, the S&P 500, so it's got 500 stocks in it. Those top 7 big tech companies had an average return of about 60%. And the other 593 companies had an average return of about 3%. So, there's this big disparity going on, and the fund managers that you're using are essentially, that they've got exposure to that sort of increase, but they're not following the fad, if you will. Those stocks have already come off a little during August, so it'll be interesting to see what happens going forward there. With interest rates going up, of course, bond returns were again subdued. They were negative for government bonds, slightly positive for corporate bonds, but that held down returns as well. On the flip side of that, of course, rising interest rates means that the investment managers can start to invest at higher rates, which actually gives you a better forward-looking outlook for those portfolios. With having a look at each fund that you're investing into, so Castle Point essentially was sitting there at minus 0.5% for the quarter and since inception. Some of that was to do with their exposure to the New Zealand emission units or carbon credits. They were sitting at around $60 a unit. At the start of the quarter, the government announced a review of the whole scheme, making the price fall from $60 down to $37. And then in a complete U-turn, they said, no, we're going to accept the recommendations of the Climate Commission, and that actually pushed the price up today. It's around $65. So what you see in that report for Castle Point, that one factor of it anyway, has already turned around. I already know what happened in July, but we're not talking July, but it's good. Castle Point is definitely back in the black at that point. So the other thing is they are paid to be active in their investment decisions. A couple of the companies that they held were pretty much hammered by the market over the June quarter. Again, I know that they've already come back quite a bit over that time. So that was AMA Group, which is a Australian collision repair company, and also Retail Food Group, which has a whole string of food chains in Australia. So that's essentially what happened with Castle Point. They did actually have some positives in terms of global equities, as I've just mentioned. That was a good one over that quarter. Harbour has pretty much done what we wanted them to do. They've invested well. They've essentially got a yield on their bond portfolio of north of 6%. With the rising interest rates, of course, the capital value of the bonds has cut into that return somewhat, but still a positive outcome for them over that time period. And again, well positioned looking forward, notwithstanding other rate increases over this time. Castle Rock really has been the big movement down for the portfolio, and that is, as I say, with the revaluation of two of the companies, so Vivo Hair Salons and Tile Depot. So Tile Depot was in terms of the outlook, but it was also in terms of very high costs resulting from them needing to get supplies in after COVID supply disruptions. But those costs have come down a lot as supply chains have freed up, and so the prospects looking forward are better for them. It needs to be borne in mind too that this fund is actually an income producing fund. Its current income yield is actually over 10%. Now, what we're expecting is that the target return for this fund is 8%, and over time it will probably, equate to that. But when you have a valuation change, it's done in one hit, whereas income is received over the course of 12 months. So, we expect them to start to claw back some of that loss as well within that portfolio, and actually be a good income producer. Looking forward, as you've already alluded to, congratulations on those new investments, and particularly the investment into the Milford Diversified Income Fund. So that's an income fund similar to the Harbour Fund, but it does different things within the portfolio, and we should be able to see that producing good returns for you over time, and it does add another layer of diversification into the fund as well. We're not suggesting any increase in the allocation to Castle Rock or into private equity at this stage, and essentially the income, the allocation to Castle Rock will increase over time as that income comes in, because you are reinvesting that income into that fund rather than receiving it as a distribution. So, if I was to grab my crystal ball, which I already know 1/3 of the equation for the September quarter, July was very strong, and it remains to be seen in terms of Castle Rock. Castle Rock only report quarterly, so at the end of September we'll have their income distribution and their valuation. The valuations on a couple of their ones, Majestic Orthfloats and the Depths, which is Hell Pizza, actually went up over that quarter, or the previous quarter. So those ones are doing really well. And of course, they've got a new investment into Brooklyn Pet Products that supplies people like Animate, and that's also doing well, particularly as during COVID, people seem to take on quite a few pets. They do quote or comment that people are treating their pets in a more human way. So these extra products that they're offering are flying off the shelves. Well, I know that happens in my own family, so I can see that happening out there. So really, that's it in summary in terms of the June quarter, in terms of the positioning of the portfolios. Everything's within ranges, everything's invested according to where the SIPO is. Inflation's still an issue in terms of its level, but it is dropping and will drop over time. It makes CPI-based objectives, quite hard to beat, but as they come down, then that becomes possible again. And we're not recommending any further changes to the portfolio at this stage. Happy to take questions.
Thank you, Peter.
It did seem to take quite a long time to get the Milford investment made. Is it going to happen every time we pick up in Harbour? Yeah.
Perhaps the chief executive could answer that question on behalf of Peter, because
Sure.
it was my passport that they rejected on 3 occasions for some reason. I don't know, but apparently I'm not human. Following on from the previous conversation about artificial intelligence, I abandoned the paper process and used the electronic one, and that worked perfectly the first time.
So they do take a little bit of time to set up, quite a bit of paperwork. Yeah, that took probably a little bit longer than it needed to.
Yeah, so they go through anti-money laundering checks with all signatories on the account. So they have to verify that A, I'm human, B, I'm resident in New Zealand, C, I'm not a drug dealer or anti-money laundering and all of this kind of. So that involves verifying my address, my background, our history, and all of the staff who have signatories on that account. So we tried that via my passport, which I thought was, a valid document issued by the New Zealand government, but failed a number of times. And yeah, as I said, it did take longer than expected, and that was my fault. But that was the system. Let's blame the system.
Yeah.
Yeah, it is actually. Sorry, it is actually a something that exists now. Like when I started in this industry, 33 years ago, money was invested on the basis of a handshake. We could actually get money invested before even the investment management agreement was signed. These days, there is a lot of hoops to go through, and money laundering is one of them. Counter financial terrorism is another. So it's quite a process, and even the biometric test, which Jeff just said, the electronic version can fail on the basis of something like I remember doing one for my own. Or rather, I'm a trustee on Neko Foundation, and I stood in front of a painting, one over there with fish on it, and that's the reason it got rejected. So these things can take time. In our experience, though, you actually invested reasonably quickly by comparison to a lot of others. A lot of others have issues when people are overseas, It's quite a process, but unfortunately you have to go through it these days, even to open a bank account. So, yeah.
Are there any other comments or questions from our observers, or just can I ask just in terms of process? And Peter made the comment earlier that he doesn't have access to our order paper.
So that was emailed to Peter. So I'm not sure.
Oh, sorry, Kelly.
Robin
Sorry.
emailed that probably Friday. But I have sent it to you again.
Yeah, I see that. So I'm just having a look.
And also,
no, that is correct. It's my bad. Beg your pardon.
Okay, yeah, because I mean, you need to have that so you can see what we see, and also in terms of Peter's report, should there not be a resolution or recommendation that we receive that report so that it ties it in?
So that's an attachment to my report.
Okay, so when we receive your report, we're receiving this as well. Okay, okay. Okay, well, thank you, Peter. Much appreciated for that wider overview and speaking to your report. Yeah, I've got nothing further to add. By all accounts, it's we're tracking in the way that we hope to track in the next report that we'll be receiving, with some of the activity that's happened since the generation of this report. So yeah, we just keep our eye on the ball. Thank you. Okay.
Brilliant. Well, it's nice to see you all. Thank you very much.
Likewise, Peter. Thank you. And with that, I'll call the meeting closed.
Can I just get the seconder for the minutes? I did, it was very fast. You moved and someone seconded the minutes?
I think
Councillor Laurence. Take your pick, really.
Kelly, one quick question. The cash balances, the council ones that we're showing in this report, they've presumably come down by the amount that we've put into Milford, is that?
That's right, yeah.
Milford.
So in the on-call and up to 30 days, that included the money that we're holding aside for Milford. Yeah.
And also the fund's performance in that graph, is that net of all fees and costs and so forth? So that's the actual. Yeah, great. Okay, well, I'll draw the meeting to close, ladies and gentlemen, 10-1. Karakia whakamutanga. Steve or Lou, do you have anything at hand?
No, I don't, sorry.
I do.
Oh, thank you. Thank you, Steve.
Kia tau tō rangimari e, ki runa e ngā iwi o te ao.
Let your peace reign on all the people of the world.
Thank you so much, councillor Cretney, much appreciated. Thank you, observers, for being part of this